Everyone, now comes the real section 9, that is the levy section. So before this we have seen two sections, section 7 which is supply, and as I told you that imposition of GST is on the taxable event of supply, right? So section 7 defines what is supply, section 8 defines what is composite supply. Now let's see the actual levy section 9. So it says levy of CGST, and similarly you will have sections in SGST, UTGST as well as IGST. Subject to provisions of subsection 2 means 2 will override 1. Okay, subsection 2 overrides subsection 1. There shall be levied a tax called the CGST, Central Goods of Service Tax, on all intrastate supplies. All intrastate supplies. Okay, and in case of interstate, they will go under IGST Act. Of goods or services or both, of course, except on the supply of alcoholic liquor for human consumption. Means as far as alcoholic liquor is concerned, there is no levy. There is no levy on alcoholic liquor for human consumption, of course. On the value, so tax will be imposed on value determined under section 15. We'll see the whole chapter of valuation, and at such rates are not in course good for you, not exceeding 20%. So it says that the government can impose CGST at any rate as discussed in the council meetings and decided, but it will not exceed 20% under any circumstance. Okay, so this is the maximum rate, 20%, as may be notified by the government on the recommendations of the council and collected in such manner as may be prescribed and shall be paid by the taxable person. Those are customary words. So important points to note is that it will be on intrastate supply, it will be on goods and services or both, except alcoholic liquor for human consumption. It will be imposed on valuation. How the valuation is done, that is decided in section 15. So we'll see section 15 and corresponding rules later on. And the maximum rate is 20%. So this is CGST rate of 20%. And as you know that on intrastate supplies there is CGST plus there will be corresponding SGST with equal rate. So if the CGST rate is 20, SGST will also be 20. So the maximum overall rate will be 40%. Okay, and in IGST what happens is that it is composite of both CGST and SGST. So IGST rate is the combination, means IGST rate can be maximum 40%. So that is very simple. Okay, then subsection 2 says which overrides 1, the central tax on supply of petroleum crude, all the kinds of petroleum products, the crude oil, the high speed diesel oil HSD, which is available on petrol pumps as diesel, then motor spirit means petrol, natural gas and aviation turbine fuel which is used in aircrafts shall be levied with effect from such date as may be notified by the government on recommendation of the council. So this is kept in abeyance. As far as alcoholic liquor is concerned, the government doesn't intend to impose GST. Okay, therefore they have excluded it from subsection 1. But as far as petroleum products are concerned, government's intention is to impose GST but from a future date, not right now. So they have kept it in subsection 2 and said that we will impose it as and when we think fit to do so. Okay, but right now it is not imposed. Then subsection 3 and 4, these two subsections are reverse charge. They are for reverse charge, and subsection 1 and 2 are forward charge. Forward charge FC you can write down, though in case of subsection 2 it is not yet imposed. So but whenever it is imposed, it will be in forward charge. 3 and 4 are RCM, reverse charge mechanism. So how does reverse charge apply and how does it work? Let's see. So it says, subsection 3 first says that the government may, on recommendation of the council, may means it is not compulsory, it is optional, by notification specify categories of supply of goods or service or both. So categories of supply will be notified by the government. Okay, so if government says that okay, on this pen is notified under this section, so reverse charge will apply to pen. Example, it is not yet done on pen, but I'm just giving an example. So government will specify category of goods or service or both. Now as far as our studies are concerned and exam point of view is concerned, reverse charge on goods, there are a lot of goods which are notified here under reverse charge, but that is not in course, so you don't have to study that. But the services which are notified under this section are in the course, so we will study it. Okay, next to next lecture will be on reverse charge. The whole list we will see of services. The tax on which shall be paid on reverse charge basis by the recipient. So who pays tax? The recipient of such goods or service or both. And all the provisions of this act shall apply to such recipient as if he is the person liable for paying the tax in relation to the supply of such goods or service or both. Means he will be considered as an assessee, he will be considered as a taxable person. Who? The recipient. So let me explain you how the reverse charge applies. It's a very simple thing. See, here is the supplier and here is the recipient. Now in forward charge what happens? Let us see that first. In forward charge, when the supply is made of goods or service or both and the value of supply is say 1000 rupees, then the supplier will add CGST, SGST or CGST plus UTGST or IGST, different combination depending upon interstate sale. So I will just write GST. So he will charge GST. Now if suppose the GST is at 18%, so he will impose 180. So this will be added and the total invoice value, invoice price will be 1180. So this bill will be given by supplier to the recipient. Okay, and the recipient will pay him full 1180. Means what the supplier is doing? Supplier is imposing 180 rupees of GST and recovering it from the recipient. And after it is recovered, he will pay this 180. Now don't go by my words that after recovery, this is on supply. If the supply is made and the bill is made, the supplier is liable to pay 180 to government, the central, state, as the case may be, depending upon inter and what is the component of CGST. CGST will go to the central government, SGST will go to the state government, okay, and IGST will be first paid to the central government and then central government will hand over the portion, half of it, to the state governments. Okay, so this 180 will be paid to government. So who is paying it to the government? The supplier. And the supplier has to get himself registered. So all the procedures are to be followed by the supplier, like registration, payment, returns, audit, etc., accounts. Everything has to be done by the supplier. So this is called as a forward charge, right? This is forward charge. Now what happens in reverse charge? In reverse charge, if this is the supplier and here is the recipient, supplier will supply the goods or service or both. He will make the bill And if say, okay, I'll not write bill, I'll just write value. If the value of supply is 1000 rupees, he will just supply it for 1000 rupees net of tax. Means he will not impose GST. He will not include GST. Okay, he will not charge any GST. That doesn't mean that the goods are exempt. The goods are taxable, the service is taxable, but the supplier will not charge any GST. He will just supply it at 1000 rupees to the recipient. Now what the recipient has to do, if the GST on this is 180 rupees, so when he receives on receipt of these goods or service, the GST of say 180, GST will remain same if the rate is same. So this GST of 180 will be paid by the recipient to the government. Means he will pay 1000 rupees to the supplier and pay 180 rupees separately to the government. So who is paying it to the government? The recipient. And one more point I'll explain right now, that after paying this 180 to the government, he will take the ITC. He can avail the input tax credit of 180 rupees at the same time. Though we'll study this in the chapter of ITC later on, but you should remember this from this day onwards, that after making payment of 180 to the government, he is entitled to claim credit of the same, and then he can use it to pay his output tax liabilities. Okay, so he'll pay to the government, and then all the procedures will be applicable to recipient. All the procedures he will have to comply, like registration, payments, returns, etc, etc. So whatever procedures are applicable, audit, accounts, and so on and so forth, will all be applicable to the recipient, as if he is the taxable person for this supply. So this supply is basically inputs for him, right? For recipient it is inputs, but he is deemed to be liable for that also. So that is called as reverse charge. Very simple thing. Instead of supplier paying it to the government, the recipient will pay it to government. And after all, the matter will remain the same, because anyways in forward charge what was happening, the supplier recovers it from the recipient and pays it to the government. So anyway the burden is falling on the recipient only now. Here the supplier is excluded and recipient has to directly pay it to the government. So in fact the procedure becomes simpler. Okay, so why does the government do this? That I'll explain when we'll go to that whole notification for services. Okay, so I'll explain you the logic behind all those points. So now come back. So that is subsection 3. Subsection 3 will apply to which type of goods? As notified by the government. Which services? As notified by the government under this line 3. Okay. Then comes 4. Now this 4 has been what we can say point of debate since 2017 July, when the GST Act came into force. And earlier it said that if anyone, any registered person buys any goods or service from an unregistered person, means the supplier is unregistered and the recipient is registered, then reverse charge will apply. The recipient will have to pay tax on that goods or service or both for any goods. So earlier it was for any goods, any service, and therefore a lot of litigation, not litigation, a lot of complaints came from the industry that if the buyer is a registered person and he is buying goods from a lot of unregistered persons, then he becomes automatically liable to pay tax. It was an automatic section, automatic reverse charge. If you purchase any goods from a unregistered supplier, then you, the registered recipient, would become liable for any kind of goods. So even if I'm making say small purchases, I would be liable to pay GST on that under reverse charge. and at the same time I can take credit also. So a lot of complaints were received by the government that why this burden, and unnecessary burden, and unnecessary compliances, a lot of expenses involved in compliances. So government had kept this reverse charge in abeyance for long, and since 2017 it was never made applicable. In April 2019 they amended it, not April but the Amendment Act of 2018. By that Amendment Act they have amended it, and now it is not applicable for every goods and service but only for specified goods and services. Okay, so let's see. That is a change which is a welcome change. So the draconian nature of subsection 4 has gone. Now it is simpler. So it says the government may, on the recommendation of the council by notification, specify the class of registered persons who shall, so this class of registered persons means the recipients, means registered person here means the recipient, who shall, in respect of supply of specified category of goods or service or both. So earlier these words were not there, specified category was not there, it was applicable to all goods and services. Now it is made applicable only to specified category of goods or service or both, received from unregistered supplier. So that part remains the same. Supplier is unregistered, recipient is registered. Okay, supplier is unregistered, recipient is registered, and the category of goods is those which are notified. So now this subsection 4 is applicable only to notified goods and services, not to all goods and services. Okay, very good. Pay the tax on reverse charge basis as the recipient of such supply of goods and service or both, and all provisions of the act shall apply to such recipient as if he is the person liable to pay the tax. So that part remains the same. So the logic remains the same. Only thing is that this subsection 4 would apply only when the supplier is unregistered. So three things have to be seen in subsection 4. Supplier is unregistered, recipient is a registered person in GST, and the supply is of notified goods or service or both. Okay, so three things: supplier is unregistered, recipient is registered, and notified goods or service or both. Means, so if these three conditions satisfied, then only the RCM would apply. Okay, but if the supplier of these notified goods are the same, say for example the goods is prescribed as apple, just an example, is prescribed as an apple. So even if an apple is supplied by a registered person to another registered person, will reverse charge apply? No. So if the supplier himself is registered, then forward charge will apply and he will have to pay tax. The supplier will have to pay tax, even though the goods are notified under subsection 4. So subsection 4 applies only when the supplier is unregistered. But if he is a registered person, then forward charge will apply. So that's how 4 is different from 3. In case of 3, subsection 3, the supplier may be registered, may be unregistered. In both the cases, reverse charge would apply. But in subsection 4, only when the supplier is unregistered, the reverse charge will apply. Okay, so if somebody asks you what is the difference in reverse charge under subsection 3 and under subsection 4, what will you say? Then in subsection 3, the supplier may be registered or may not be registered. In both situations, reverse charge applies. But in 4, reverse charge applies only when the supplier is unregistered. and the recipient is registered. Okay, so that's simple. And then there is a notification issued under subsection 4 with effect from 1/4/19. Now this notification we have to read once, I'll tell you, but this is in respect of real estate transactions, and the Institute of Chartered Accountants of India has notified that such notifications and every notification which is applicable to real estate transactions is not in course. So actually speaking, this is not in course, but let's go through it once, okay, just to understand, and then you can forget if you want to forget, but once understood it's difficult to forget. Okay, so let's see. And it's good to know also, because this is in respect of an industry, and later on you will become a chartered accountant or company secretary, as the case may be, and you'll have to guide the clients, so you should know, right? So from practical knowledge point of view, let's read it once. So the category of supply is given, what kinds of goods and service, and the recipient is also given, that who is the recipient, who is liable to pay under reverse charge mechanism. So first is supply of such goods and services, or both, which constitute the shortfall. Okay, bracket is also there, so let us first read without the bracket and then we'll see bracket, because bracket is exception. So first we'll read without bracket and then we'll see the exception also. Okay, supply of such goods and services, or both, which constitute the shortfall from the minimum value of goods or service, or both, required to be purchased by a promoter. Promoter means a builder, for construction of a project in a financial year or part of the financial year till the date of issuance of completion certificate or first occupation, whichever is earlier. Now in that minimum that is given there, you just write down 80%. Okay, now I'll explain a few things from practical point of view, though these are not in course. Okay, so if you forget, it's acceptable, there is no problem. Now in case of real estate business, what the government has done is that they have given some, from 1/4/2019 they have given some concessional rates. So here is a promoter. This promoter is that same person who sells his flats before completion certificate, right? Very good. Who sells flats before completion certificate or the occupation, right? Now so when he does that, he is liable to pay GST. He is liable to pay GST, right, on supply. Now when he buys the materials, the building materials basically, so when he supplies this, so this GST rate, he is now given some concessional rates. From 1/4/19 he is allowed to pay tax at some concessional rate, but one of the condition for this is, that 80% of this material should be bought from registered suppliers. 80% should be bought from registered suppliers. Up to 20% you can buy from unregistered suppliers also, like some building material is coming in, some steel and so on and so forth. So 20% is fine, but 80% should come from registered suppliers. Means if they are registered, they will pay GST, and this GST which is paid here is then not allowed as ITC, not allowed as input tax credit. Instead of that, some concessional rate is given on the output service. So they have to just pay some prescribed percentage on the output service, and that's it, without taking ITC on input. So government is safe. Government has received the tax on these material also, and now government will receive tax on the final supply to flat owner also. But if this 80% is not achieved, if less than 80% is bought from registered suppliers. So for example, I'll take, say, only 61% is bought from registered suppliers. In a year, in the whole financial year. Then what is the difference? Difference is 19%. Difference of 80 and 61 is how much? 19%. So RCM would apply on the shortfall of 19%. That's 80 minus 61. Not on the balance 20%. 20% is allowed anyways. So 61 is bought from registered and 39% from unregistered, right? Means no GST has been paid on this 39%. 20% is anyways allowed. The balance is 19. So that 19 is called as a shortfall. So on this shortfall of 19% of total purchases, RCM would apply and the builder, the promoter, will have to pay tax on reverse charge. Understood? So that is point number 1. So simple. Okay. Then the second point. But let's see the exceptions. Now the exceptions are development rights, other than service by way of grant of development rights, long-term lease of land, that is 30 years, long-term lease is 30 years or more, against upfront payment in the form of salami, premium, development charges, or FSI. 3 things are excluded: TDR, transfer of development rights, lease, and FSI, including additional FSI. Means, so as I told you, therefore I have written materials here. Now material, and it will also include some kind of services like some contractor services and all. So this is for goods and service both, but not for, if somebody is there is a person who gives to the promoter, what he gives: TDR, transferable development rights, FSI to construct on his premises, or long-term lease, that is lease exceeding 30 years. So if these are the services which are given by this person to the promoter, and this person is unregistered, and he is giving these 3, 1, 2, 3 to the promoter, and promoter is a registered person, of course. So in this case, will you apply reverse charge? The answer is no. Not under subsection 4. So here 9(4) doesn't apply. Right now 9(4) doesn't apply. Okay, for these 3 things 9(4) doesn't apply. Good. Then come back. Okay, so that is the first point. Then second point is cement. So similarly, cement will also be bought by the promoter for construction of his building, right? Cement falling in chapter so and so in the first schedule to Customs Tariff Act, that is of no use, which constitutes the shortfall from the minimum value of the goods or service or both required to be purchased. So here also the minimum is 80%. So if you are buying cement also from an unregistered person for construction project in a financial year, okay, or part of the financial year till the issuance of completion certificate. So we always talk till the completion of certificate is given, which is earlier. Now here, though the word written is shortfall, but due to few notifications, the rule is that though it is 80%, means you have to buy 80% of your cement from a registered person. But if you buy less, say if you buy 61% from unregistered, then the whole difference of 39 would come under RCM. So for cement, the matter is slightly different. The complete difference will come under RCM, and the promoter will be liable to pay the tax. So like if you write here 61% is bought from registered person, if then 39% will come under RCM. In case of other goods and services, it will be difference of 80 and the shortfall, but here it will be full difference from 100 will be under RCM for cement. And third is capital goods falling under any chapter of the first schedule to Customs Tariff Act supplied to a promoter for construction of a project. So capital goods, all kinds of capital goods, which can include what will be included, what kind of capital goods they will require a builder, those heavy machineries and all, bulldozers, tippers, etc., etc., whatever machinery is used in the construction projects, cranes. So there also the RCM will apply, and the promoter will have to pay the tax. And then all the explanations are given, but as I told you, it is not in course, so you can leave this. Right, so that was subsection 4. RCM, where the supplier is unregistered, recipient is registered, and the transaction is of specified goods or service or both. Then coming to 5. 5 is a very interesting one, subsection 5 of section 9. This is tax payable by middlemen, neither by the supplier nor by the recipient, but middlemen. So who is this middleman? Let's see. The government may, on recommendation of the council, by notification specify categories of services, underline here services. So 9(5) is only for services, and we'll see which services also. Tax on intrastate supplies of which shall be paid by the ECO, electronic commerce operator, if such services are supplied through it. See, through it. So he is a middleman. ECO is a middleman, like Uber is a middleman. Who is the actual supplier of the taxi service? The taxi owner. Who is the recipient? You, the client who go in his taxi. But who is liable to pay tax? Uber. Who is the middleman? Who is the connecting person who connects the taxi wala with the customers. So this Uber, Ola, will be liable to pay tax through it, and all the provisions of the act shall apply to ECO as if he is the person liable to pay tax on such services. Simple. So Uber, Ola will be liable to pay tax on the taxi service, right, and not the actual taxi owner, provided that where the electronic commerce operator does not have a physical presence in the taxable territory. Now these ECOs are normally the websites, they are websites now, or the portal as we call them. What if that portal operates in India but it doesn't have an office in India? Then what? So it says if they don't have a physical presence in the taxable territory, any person representing such ECO for any purpose in the taxable territory shall be liable to pay tax. Means if they have any manager in India or a representative in India for their businesses, so that representative would be liable to pay tax. And if they don't even have a representative, so then the second provision applies. Provided where the ECO does not have physical presence in India and he does not have a representative in India, such electronic commerce operator shall appoint a person like Farooq Haque chartered accountant in the taxable territory for the purpose of paying tax, and such person shall be liable to pay tax. So then they have to appoint a special person, maybe their lawyer, maybe their chartered accountant with a special power of attorney to pay GST in India. Okay. And who are these notified persons? under 9.5, so that is given in notification number 17 by 2017. Let's see who are notified here. First is services by way of transport of passengers by radio taxi. So as I told you, Uber, Ola, etc. Nowadays there are a lot of these operators. Motor cabs like that Miru is there. Maxi cab and motorcycles. Nowadays motorcycles are also run through these portals. Then services by way of providing accommodation in hotels, inns, guest houses, clubs, campsites and other commercial places meant for residential or lodging purposes. So which websites will come here? Eco, hotel.com, then Make My Trip, MMT, makemytrip.com, cleartrip.com, and there are so many other websites. Booking.com, and there is one this Airbnb.com, and all these will come here. So these are the ECOs, the electronic commerce operators. Okay, so they will be liable except where there is an exception here, except where the person supplying such service, means the actual hotel through ECO is liable for registration under section 22. So if the actual hotel is liable for registration, if their turnover exceeded the threshold limit, then they will be liable for registration. So in that case, if the hotel itself is registered, then hotel will pay tax, then the ECO will not pay tax. But in case the hotels are not required for to register themselves, small hotels who do not cross the threshold limit, so they are exempt. In that case, the website, the portal, the ECO will be liable to pay tax. Okay, so let me explain this in a chart. That here is the hotel, the actual supplier is the hotel or campsite, etc, etc. Hotel, lodges, camps, and they exist by so many names, and the actual recipient is the customer who goes and stays. But these hotels, lodges, camps, etc. operate through the electronic commerce operator, the website. Okay, and through them they sell their rooms to the customers, right? Now what happens is that if these hotels give 100% of their rooms to ECO, they don't sell it separately, they sell only through ECO, then in that case the hotel doesn't have its own turnover, so it will not require registration. Then in that case ECO will pay tax. But if the hotel gives part of the rooms to ECO and part they sell themselves through their website or whatever means, direct to the visiting customers, and their turnover have exceeded the threshold limit, we'll see the threshold limits later on, okay, in the registration chapter. So if their turnover exceeded the threshold limit, then they require registration. So if they require registration themselves, then they will be liable to pay tax, then ECO will not pay tax. Okay, and if the hotel is a small hotel, they have a turnover of only 4-5 lakhs and that's it, then they don't require registration, then in that case the ECO will pay tax on sale of those rooms through their portal. Understood? Simple. So that is the second point. So first is regarding taxi operators, Uber, Ola. Second is about hotels, hotel.com, booking.com, Cleartrip, Make My Trip, and so many others. Trivago is also there these days, but Trivago doesn't book themselves, they only connect you to the other websites. Then third is services by way of housekeeping, such as plumbing, carpentering, etc. So Urban Clap is there, and those agencies are there. Except where the person supplying, here also the same exception, that the person supplying, means the carpenter, plumber, etc., is liable for registration. Means if his personal turnover exceeds the threshold limit and he himself has to pay tax, then the eco will not pay tax. Then they will pay tax. But if they are very small and they don't have turnover above the threshold limit and they don't require registration, then the eco will pay tax. So there are sites like Urban Clap, etc., who supply these kind of laborers, or you can say professional services, plumbing, carpentering, etc., garden keeping, and so many others. Buy supply. So there is a site called as kamwalibuy.com. There are a lot of such sites these days. Okay, so that is section 9, basically very simple section. Okay, and in the next lecture then we'll see the reverse charge mechanism, that is 9.3, all the services which are prescribed under 9.3, that we'll see in the next lecture. Great.